Did you know that learning to invest successfully can make you more money than almost anything else you could spend your time doing? For example, if you learn how to earn a 10% average annual return, which is comparable to the average return of the US stock market, and do so for 40 years while contributing only $5,000 each year, you'll end up with over $2.4 million. That's not bad, considering you only contributed a total of $200,000. So if it's that easy, why isn't everyone a millionaire? Well, extensive research has shown that the average investor makes nowhere near the stock market return of 10%. In fact, a recent study by Dalbar, a leading independent financial research company, showed just how poorly the average investor did during the 20-year period from 1991 to 2010. While the S&P 500, which is a good approximation of the US stock market as a whole, returned an annualized 9.14%, the average US equity investor only made 3.83%. In other words, for the last 20 years, the average equity investor in the US has barely beaten inflation. It's no wonder some people decide to stop investing altogether. But there is a solution. It's called passive investing. Passive investing is the only technique we teach at scientificinvesting.com because it's the only method of investing backed up by simple math, hard data, and literally hundreds of unbiased academic studies. By definition, passive investors seek to match market returns by keeping fees and poor investment decisions to a minimum. So let's take a look at the last 20 years again, when the S&P 500 returned 9.14% per year. A passive investor in US stocks would have made about 9% after fees. This increase in return makes a huge difference in the long run. If the average investor invested $1,000 in 1991, growing at 3.83% per year, it would have been worth $2,121 20 years later in 2010. But you know what? A passive investor's $1,000 growing at 9% per year would have been worth $5,604, over 2.5 times more than the average investor. Doesn't more than doubling the potential value of your investments in only 20 years sound like a good reason to learn a little more about passive investing? But you're not going to learn about passive investing from your broker or the financial media. Brokers don't like to talk about passive investing because they care more about convincing you to buy expensive investment products that passive investors don't need. And the financial media rarely covers stories about passive investing because their advertisers, who also want to sell to you, wouldn't approve. In other words, most of the financial industry avoids talking about passive investing because it makes it harder for them to make more money off of you. That's what makes scientificinvesting.com different from almost anywhere else you can learn about investing. Because we only charge a one-time fee and don't try to sell products or advertise to you afterward, we can be bias-free. In addition, you can trust everything we teach because we back it all up with simple math, empirical evidence, and peer-reviewed academic studies. You can even find the press release for the study referenced in this video on our website. Our online video course will teach you everything you need to know to become a successful passive investor in a fun and easy-to-understand way. So take a few minutes to check out the other sections of our website, such as the Investing Comparison Calculator and the full description of our course, which even includes a risk-free money-back guarantee. At scientificinvesting.com, we'll teach you to increase your investing return by 3%, 4%, or even more per year, which for most people equates to hundreds of thousands or even millions of dollars over their investment lifetime. So don't be like the average investor. Let scientificinvesting.com teach you how to take control of your financial future.